The threat of a credit rating downgrade by Standard & Poor's, the same outfit that downgraded the US, is hanging over the heads of our major banks. But our branches of the Aussie-owned Big Four may indeed be faring better than those in the lucky country itself. Gareth Vaughan from interest.co.nz joins us now for the Inside Word. Good morning to you, Gareth. I guess the other credit rating agencies have already downgraded the big banks, so is it likely that Standard & Poor's will simply follow suit?
Look, we don't know yet. We'll find out in the fourth quarter of this year. What they're doing is they're revamping the methodology they use to rate banks, and what they're looking at in particular with New Zealand is the country risk assessment they use. And this basically, the sort of two main areas of concern here seem to be that our banks get a lot of their funding from offshore. About 36% of the money they borrow to then on-lend to their customers comes from overseas. Obviously, the overseas financial markets are very uncertain at the moment. And the other thing is economic factors within New Zealand. And one of the issues they're looking at there is ongoing current account deficits and that type of thing. So they're having a good look at it. They're going to tell us in the fourth quarter what they're going to do. And the feeling seems to be that there is a chance of a 1 to 2 notch downgrade. And S&P currently has AA credit ratings on our big four banks.
And if they were to do 1 to 2 notches of a downgrade, what would the implications be?
It could see the bank's own funding costs rise, and in turn that could be passed on to customers.
Obviously, though, their profits have still been rising, so it sort of seems at odds with a credit rating downgrade. What is it that's pushing up their profits? Yeah,
look, they're doing very well. I mean, ASB came out last week with a record annual profit of $568 million. I mean, that's 7% more than they made in 2007 at the height of the boom, which is extraordinary. Not many industries are doing that at the moment. Basically, their impaired loans are falling as they come out of the global financial crisis, and also their interest margins are going up as home loan customers switch from fixed-rate mortgages to floating rate home loans, which are more lucrative for the banks. I mean, the switch across the industry has been from 36% of home loan customers on floating rates a year ago to 56% now, which is huge.
Could we say that unwind, though, is the likelihood of interest rates having to go up, people switching back to fixed rates?
We could do, but, I mean, it's probably not going to happen overnight. Most economists are now talking about OCR going up in December. Maybe it won't even happen then, depending on what happens internationally, but you would imagine there'll be a drift back towards fixed at some point when those rates are lower than the floating rate. Of course, at the moment, the floating rates are lower.
And given it's cheaper for them to offer floating rates, more of us are on floating rates, should we be agitating a bit more to get a better deal?
Yeah, look, I think we should. I think it's not really in New Zealanders' natures to haggle. Obviously, when you go to third world countries and you go shopping, you sort of learn you have to. But I mean, we had a look at the bank margins on home loans recently, and we looked at July 2005 and compared it with now. And on floating rate home loans, the bank's own margins, so that's the difference between the cost of the money they borrow and what they charge their customers to borrow off them, has gone up by about 100 basis points. And on the 2-year fixed mortgage rate, it's gone up by near 200 basis points. So their margins have gone up at a time of economic hardship for a lot of their customers. So I think, by all means, feel free to haggle when you go to discuss fixing or taking out a new home loan rate with your bank. And remember, it's a competitive market out there. There are lots of banks, and you can always take your business elsewhere.
So what sort of information should you go in there armed with? And if their margins have gone up by that much, how much of a discount could you perhaps expect?
Well, you never know until you ask. I mean, I've heard stories of people recently getting up to sort of 30, 40 basis points off the advertised floating mortgage rates. So it's certainly worth asking, and ask them questions about their margins. Ask them what they've done. Talk to them about how they're delivering record profits, and you just never know what you might get.
Yeah, if you don't ask, you don't get. Thank you, Gareth.
Exactly.
That is Gareth Vaughan from interest.co.nz.